Good morning. What's good, everyone? Uh, I want to check. I hope everyone is hearing me clearly. I want to believe everyone is hearing me clearly and the stream is going on smoothly. Let me check real quick. I took this trade in Asian session and I just wanted to come here and break down why I took this trade, the idea behind this trade, why I'm targeting that, why I entered at that point, and yeah. But first, let me confirm if the audio is working fine, so I don't end up talking to myself. All right, so that has been confirmed. Everything is going smoothly. So let's get into the breakdown of this trade. I missed two trades yesterday, two sells yesterday. That could have given me 2 hour profit. Both, but yesterday gold was just dumping without pulling back. But finally, I was able to catch these buys. So let's break down why I took these buys. So we'll start from the very beginning right here. I have already drawings here which I'm not going to be tampering with because the way I trade, I mark up zones as price is forming. So as price is forming, I'm marking up new zones and I don't tamper with them. Sometimes let me even like lock it. So I don't tamper with stuff. I can't go all the way. I have zones marked. If you look at it up here, you see I still have supply zones. Like you see, I mark them up. So um it gives me an insight. So when price is reaching some certain levels, I'm knowing exactly what I want to do. Am I expecting a reversal from there? Are we going to break through from there? Same way you can see this demand right here. I still have demands down. That's how I mark zones as price move. So let's get into the breakdown of this particular trade. First off, what I do is every single day come into the New York session, I mark the high and the low of New York session. Why? Don't ask me why. That's what I've gathered based on my data. I always notice that price is drawn to that high and low. For example, if you're taking a buy, this is it right here. We had this 430 2:30 New York, 15 minutes open. So we have the high and we have the low. This is the lines. I mark them both. So what I notice is price is always drawn to those points. This is if you are trading opening range, they'll tell you mark your wait for London session open. Sorry, New York session open. Mark your high and low, and whichever one breaks, you take the trade. And I don't do that, right? But I simply mark the highs and low because I understand that price usually draw back to those zones whenever you're trading. So if you're taking a short, for example, let's say there was a supply zone up right here, something like this. So let's say price tapped into the supply zone right here. We're going to have a drop mostly that will be drawn back, to this previous day. Let me make this white. So we have price drawn back to this previous day London high. So if it's for sorry, New York high, I don't know why I'm saying London high, New York open high, and then if it's for a buy, right, we're gonna have price tap into your key level and draw back to that New York open low. So that's why I'm simply targeting that as my take profit. Now, how did I get into this trade? What was the idea behind, this trade? Then, what was the idea behind this trade? All right, so If we look at it from the back, yeah, because in trading, you're using past data to predict the future. Not 100% accurate, but like you're using your past data to predict what is most likely going to happen. So we had demand zone right here before. This was a demand. And this right here was a demand zone. Yes. So price broke through this demand zone. This is why I said I lost. So if you don't know how to mark demand zone, check my playlist. I you have videos on supply and demand where I specifically taught how to mark demand and supply zones properly. So probably after this stream, you can just go to my playlist, check for supply and demand trading strategy, and you would see it explained in more details there. So in supply, you want to look for an aggressive push to the upward side. So we had this, aggressive push right here. We had this push. So we had this low taken out, right? We had this low, we broke structure to the downward side, formed a high, right? And then we had this low, right? Took out this, formed a high, and then came down back, but we didn't take this low to then break this high. So that's like a break of structure, a change of character to the upward side. So that indicates that okay, this place has been left with orders to fill. So when price comes back there, it's supposed to respect it. So you mark it as the last opposing candle before the impulsive move up, and then SLP traders will be like, okay, this is an area of inducement, right? So this is their demand zone, right? A valid order block or whatever they want to call it. And now this is going to be their inducement. So this point right here, where's my trend line? It's been a while I use trend lines. So this point right here is like their trap for early buyers. So early buyers will get trapped right here. So I don't do all of that though. So 'cause I enter with confirmations. I'm explaining so you understand the idea behind my trade. And technically, hold on. Okay. So this was a zone that I was like, okay, but unfortunately, when price eventually tapped that zone, this was the London or the New York low. This is the New York high, like I explained. When price tapped this, it just broke through that zone. So at this point now, this demand zone has been flipped to supply zone. As you can see, price pulled back in and then pumped further. However, I do enter with confirmation. So on the 1 minute time frame, I don't know if I can go back. Let me see if I can go back. On the 1 minute time frame. Okay, let's see if I can go back to that. Yes, this was it right here. Thank you. So I was looking forward to taking a trade, but price didn't tap me in. Let's see if I can remember the full trade. I think I was looking forward to entering somewhere right here. I don't think I can remember. All I know is I couldn't catch the trade. I couldn't catch the trade. So we had that break. Now, after we broke through this demand zone, right, this becomes invalid, right? This demand zone becomes invalid. So where is the next demand zone again? So the next demand zone is this. This is the next demand zone. So this was the next demand zone. This right here. If you notice, it's the same pattern. We have this push up that took out the previous high, and then you can call this your trap. So you want to say this is your inducement. So you are waiting for price to come back to this zone right here, and then you can take a buy. Yes. But notice how I would have taken this buy, but I didn't take it. Why didn't I take it? We are going to see why I didn't take it right here. So if you don't understand how to trade using confirmations, just check my playlist. I've explained exactly how to use confirmations to trade. That's something I've done already. So just check And I think the title of the video is the only supply and demand video you ever need. So just go watch that and you're gonna understand. So now when price tapped into this point, yes, I could have taken a buy from here, and as you can see, we saw an initial reaction from here. There was a reaction from here that pushed price up. But why didn't I take it? The simple answer to why I didn't take it was because of the risk to reward ratio. I'm not gonna lie. That's the only reason. I didn't like the risk to reward ratio that came out. So that kind of like saved me. What do I mean? Let's take a look at it. So that was what saved me from taking this particular buy. Okay, so this is when price tapped the zone. Yeah, very. I remember this clearly because this was yesterday. So when price tapped this zone right here, we had this push up, that failed to take out this low. I'm gonna use my trend lines here. So this became a low right here. So this was a low, came into the demand zone, respected it, pushed back up, never came back to close below this low. Because if we close below this low, then we are breaking structure to the downward side. So it was respected. The zone was actually respected, and we had a market structure shift, a change of character. But if you look at it, first off, it was not a clean move, although right, I'll have still taken it regardless. However, when you now look at things from this perspective of risk to reward ratio, because now we are waiting for a confirmation, you're waiting for a market structure shift, right? So now you come here like this and you do this. And where's my stop loss? My stop loss is going to be below this swing low right here. Because I don't do 20 pips stop loss, 50 pips stop loss, 100 pips. My stops is always at swing highs and swing lows because that is where there is resting liquidity. I don't want to put my stop in the middle of nowhere. So let's say my stop is going to be around here because this right here the recent swing low. So you want to put your stop loss slightly below it in case of any weeks, and then we go back up, right? So now if I enter at this break of structure or this market structure shift, this change of character, where is going to be my take profits? Remember I said my take profits are always the opening highs and lows of New York market open. So now you see if my take profit is right here, realistically, okay, you don't want to be guessing where you want to put your profit based off I want $100 from the market, or I want $200, or I want $50. The market doesn't care about that. It moves according to zones. It's drawn to liquidity. It's drawn to POIs. That's all. So you want to get good risk to reward ratio, get better at your entries. Okay, that is just that. So now when I looked at this was a 1.2 risk to reward ratio. Didn't make any sense to me to take this trade, especially understanding that I'm trading on the lower time frame and not on the higher time frame. If I was trading on the higher time frame, great. I could have taken this. If I was trading on the higher time frame, yeah, 1.2, it's all right. Okay, as a swing trader, but as a day trader, I have opportunities to capitalize on way bigger move because I'm getting early entries. So simply because of that, I refused to take this particular trade. You understand? I refused to take this particular trade. That was the main reason. So because of that, I avoided it. And look at what happened right here. Price just dangled, and eventually hit stop loss right here. So it never went to take profit and hit stop loss right here. So at this point, price hit stop loss. I didn't take the trade simply because I saved myself of unnecessary low risk reward ratio setup. So sometimes these are things that you don't see in back testing, but when you trade long enough to a certain point and you begin to see the fake out, that's why I usually recommend people to trade one pair long enough. So if you trade one pair long enough, you begin to understand the fake out, you begin to understand um the manipulations a pair can give you, and then you save yourself of taking that setup simply because you've taken that you've traded that pair long enough to understand its moves. So now this was the sell that I missed and it really pissed me off. Okay, so now like I told you, I trade based off zones. So now you know that this zone right here became violated, right? Because we broke retreat after hitting stop loss. You see why I said you want to put your stop losses at swing lows. As you can see, the moment price came back to take that low, that was the previous SL, that could have been the previous SL, we broke structure to the lower side. Yeah, that reminds me, Control Z, Control Z, Control Z. Yes. So now here's what some traders will do. This is what some traders will do. They'll be like, hmm, since this is the market structure shift right here, since this is the market structure shift right here, and this is giving me 1 to 1.2, okay, this is what I'm going to do. I'm going to reduce my stop loss to this point. Now, this is giving me a 2.4 risk to reward ratio. Yes, it is, but your stop loss is at the middle of nowhere. What is the probability that price comes, pushes up like this, comes back, stop you out before continuing back, up? Because price move in waves and then you hit your take profit. So you were technically right, the buyers, of where price was heading to. You get stopped out simply because you lacked the knowledge of correct stop loss placement. Everybody is always focused on good entries, good entries, good entries, good entries, risk to reward ratio and all. But you need to also understand that where you place your stop loss is just as important as how you got into the trade. And where your take profit is, your exit, is just as important, because if you hold your trades too long with hope it's going more, you end up floating significantly in some amount of good profit, and then you lose. And then you lose the trade. I don't know if this stream is still working. Oh, okay. I hope, I really want to hope that this stream is still live. Because if it's not really live, if it's not live anymore, I'll be really pissed off. Hold on. Oh, let me check real quick on my phone here. Okay, I'm still live. Okay, I'm still live. I was concerned for a sec right there. I've been explaining for quite some minutes. All right, so back to what I was saying. You want to place your stop losses at places that make sense, because if you are placing your stop loss at a place that doesn't make sense simply because you want a higher risk reward ratio, most of the time you're going to get stopped out before price eventually goes your way. So after this zone was violated, right? After this zone was violated, as you can see in the 15-minute time frame right here, after this zone was violated, because we broke structure to the downward side, this zone now flips from a demand to a supply, meaning that I can now trade off it to the downward side, understanding that, being cautious of where the next demand zone is. So where's the next demand? This is the next demand right here. This last sell before the push up that shifted market structure from a downtrend to the uptrend. Notice how I'm using 15 minutes to mark my POIs, and I'm using the 1 minute to enter. Sometimes I use the 3 minutes. It's very, very important. So if you're trading a lower time frame, it's not like you are going to the lower time frame to mark zones and expecting price to respect it. Yes, it could, but like, you have a higher chance of using the higher time frame as your guide and then going into the lower time frame to look for refined entries to give you that better risk to reward ratios on your trades. So now I'm aware that, okay, this is the next zone, since this zone has failed. So now on the 1 minute, you can use that. So this is what I did right here. As you can see, price broke through. When price broke through, I set my sell limit. Yeah, I set my sell limit just at the end of the zone, right? And my stop loss was above this last recent high, because I know anything that makes price come back here is going to shift structure back again to the upper side. So my stop was above it like this. and then I just targeted a 1 to 2, being conscious of the next zone because I know price most likely can it's going to reverse from this point. So it was something yeah, like this. And look at what happened right here. So after we broke that zone right to the downward side, I was expecting price to pull back, but it never did. It never did. So yesterday, I don't know for other people, but for me, like, and I have a couple of friends too, like they missed the sales, a lot of sales on gold yesterday. Don't know why gold wasn't like pulling back properly. So you can see it didn't pull back to tap me in, and then it just straight up went down. After this point right here, I just cancelled the order. Let me see if it eventually tapped and dumped back. Let's see. It never did. It never it never did. It eventually went for take profit. I mean it hit take profit, but like it actually never tapped. So that was a missed trade on that. And now this zone, those kind of flip zones, which I think in ICT is known as breaker blocks, they are used once. Okay, you need to understand that those zones are used once. You don't use those zones more than once. You use those zones only once. So at that point, that zone is gone. Now we eventually tapped these other zones. Now, also, you might be wondering how am I able to know when price taps this zone? That's because I use price alerts. If you don't know how to use price alerts on TradingView, make sure to just check on my channel. There's a video I explain how to use TradingView to set alerts. As you can see in my alerts here, you can see I have price alert. You can see this is price alert for SL hit. So at any given point, if this trade reverses against me and I hit my stop loss, I'm going to know, right? I also have this alert right here to tell me, okay, if it breaks past this is going to be a demand zone broken. All these things so that in case I'm off the chart. In fact, you don't want to be glued to the chart every single day, but like knowing this gives you the flexibility to only check when you have to because you set your price alert, right? You set your price alert and then you let market do its thing. Then at the same time, also I have my TP. So if price hits my take profit, which we would love to, and who doesn't want to hit take profit, right? So I would also know all those things are very very important in my trading, makes my trading easy. So I urge you to actually use price alert. If you use price alert, you don't have to be on the chart 247, and also you don't you don't end up losing trade simply because you weren't there to like know when price hit your POI. So back to my explanation. Now that price hits this demand zone. It was 8 hours in the morning. I was even sleeping, but thank God I was able to get it right. Now notice one thing right here. When price this is on the 1 minute. Yeah, good. So when price hit this demand zone, there was an immediate rejection. Like price immediately rejected from that zone right here. Like price um immediately let's DM. You can message me on Instagram. You can message me on Instagram. Check the link in my bio and then you can message me on Instagram. All right, so back to my explanation right here. So immediately price tapped into this zone. There was a strong rejection. That's why you need to know point where price is going to. I see you can look at the candlestick. There was a strong rejection. Price rejected very strongly after tapping that, and then we formed. This is it. So price came down like this, tapped the zone, immediately rejected, formed a high, formed a low, didn't take out this low, right? So it was respecting that low and then we formed a high back. So now we've shifted structure from a downtrend to an uptrend after hitting a key level. That's how you trade things. So it's not like you are just looking for any single change of character or market structure shift in the middle of nowhere. It has to be paired with a key level. So when it was paired with this key level right here, great. Now that's a strong sign that okay, I think it's time to take buys. So now looking at this, where is my take profit? My take profit is still the previous day New York open high and low. So it will have been something like this, right? Boom. Entry at this market structure shift, stop loss below it where my stop loss is right now, and then my take profit at this high. Yes. Notice how this is still giving me what I don't want. A 1.32 risk to reward ratio. I don't want those kind of risk to reward ratio. So what did I do? I noticed that okay, I can literally see that after tapping this 15-minute demand, on the 1 minute demand was formed. So it's not like I'm just using the 1 minute demand. I'm looking at it. All these things comes from experience. So over time, you begin to understand these things and get more experienced with these things. So I got to see that okay, price gave me new area of demand. As at the time, price was around somewhere here. So I was like, will it come back? Okay, I don't want to chase price. So instead of this looked somehow like it looked far, of which eventually you can see price eventually came back to tap it, even if I had used the 1 minute. But what I did is I said, okay, no, I'm going to use, the 3 minutes. So I came to the 3 minutes. On the 3 minutes here, you can see it right here. We had this, on the 3 minutes, we had this price tapping into this key level, rejecting back up, and then forming a new area of demand, which is the last opposing candle before the impulsive move. That is why I marked it as an area of demand. So I'm like, okay, instead of entering right here, I'm going to enter at this. So I set my limit, set my stop, and then my take profit. So if price had gotten to my take profit without tagging me in, I would have cancelled this order, which would be considered a missed trade for the third time, which will have been annoying, by the way. So I said this and then I went to sleep back because it was very, very early in the morning. And then price consolidated, came back to this 1 minute area of demand. I say again, the 1 minute area of demand wasn't just because it was a 1 minute area of demand, it was because the 1 minute area of demand was formed after tapping a higher time frame level of demand, which is the 15 minutes. So that makes it very, very strong for price to react off. So as you can see, immediately price came into this zone. I was filled in, and then we had this rejection, came back down. When I was seeing this, I was like, is this price going to hold? We had a little bit of consolidation in drawdown, which is normal. This is why I said your stop needs to be where your stop needs to be. If you are trying to use 2 pips, 3 pips, 5 pips stop loss because you want a 10 RR, you want a 20. I'm not saying 10 RRs are impossible. It's very, very possible. It depends on the distance, right? Distance of where your entry is, and then where your take profit is, and also where your stop loss placement is. If there is a lot of big move for you to catch, great, your risk to reward ratio is going to be big. But if there is not much, stop trying to squeeze it by trying to squeeze your SL because I only take this amount. That's why my risk to reward ratio is dynamic. I don't have a specific risk to reward ratio because my stop has to be where my stop needs to be, and then my take profit has to be where my take profit has to be. The only thing I can do to kind of like adjust my risk to reward ratio is to refine my entries. That's the only thing I can do. The distance remains the same. Okay, so as you can see right here, price then came in, tapped into my demand zone right here, tapped into my demand zone, and then we pushed up. At this point, we shifted structure back because we were downtrend, and then we shifted structure. The moment we shifted structure, I was like, it's a nice confirmation. So that's a nice confirmation for this trade. So we came back again, and then respected. This is more like a demand zone again that was formed. This is like the last sell before the buy up, and as you can see, price came back in, respected that demand, and then pushed up. And now we've been breaking structure to the upward side. We came back. All these are normal pullbacks. It happens. This trade can you know early until like it might stay until like afternoon New York session before it hits take profit. But it should hit take profit or stop loss because anything can happen in this market before 2:30, right? So this is what the trade is looking like. So that's the whole idea behind my trade. So another thing I do is once I've taken my trades and I've entered on my lower time frame, I no longer need the lower time frame for anything anymore. So you don't get caught up in the noise of the lower time frame. I can't be sitting on the 3 minutes or the 1 minute time frame all day. It's not healthy. uh so I used it to get my entry. I've got filled in. My stop is where my stop is. My take profit is where my take profit is. And I end up going to have my whole day. That's just it. So as you can see, this is now what it looks like on the 15 minutes. So now that I've gotten my entries on the lower time frame, I'll be able to, enter the trade early, get that early entries, and just ride the trend until my take profit. So this right here is the 1 minute area of demand, and this my risk to reward ratio. Let's draw it to like, let's draw it onto like 230. Yeah, I just until like 2:30 before the next New York market opens again. So this is what the trade is looking like. This is floating about over one, like was floating over 1 hour already. This is a total of 2.33 risk to reward ratio, which is more than two risk to reward ratio. Great. So in trading, you want to make sure they are taking at least two steps forward and one step backward, because you cannot win every single trade. You just can't. You can't have 100% win rate. So the best thing you can do is have a positive, profit factor, have a positive risk to reward ratio. So every single time you win, your wins are more, and every single time you lose, your losses are smaller. That's how you'll keep compounding and growing your account. So that is pretty much it. I just wanted to come and break down my idea and thoughts behind this trade in real time. So it's not like I'm pre-recording something. I'm actually doing this live, and of course, I'm not going to be showing my P&L and what account I'm trading. Um, I am trading this account, but like it's on a challenge account, but I'm not going to like show that it's really not necessary. But the fact that I was able to break this down shows that, okay, yeah, this guy's not just coming to create content of back tested data. This is it happening in real time. So as you can see right here, like I said, also I do mark out zones as price forms. So if you see, this was actually a supply zone right here. This was a supply zone right here. That was why price reacted off it to come back um to tap my entry. Yes, this was, but this is an invalid kind of supplies on cost. There is no liquidity. So but you can see price came in, tapped it, and then rejected off it to then tap my demand, and now we are trying to break through the zone of which we should break through it. Why? Because orders has already been filled in this zone. So the more times price is hitting a zone, right, the more orders that zone is filling out. And once there is nothing left to hold that zone, price is just going to break it. So we've already filled cells that were here, and now we are coming back here. We are seeing some cells um, happening, as we are seeing. If those that are using order flow will kind of like see it much more better. But even from the candlesticks and market structure, you can tell. So these cell candles are like some of the remaining sell orders are getting filled there. But I don't think it's strong enough to push price back down all the way anymore. So eventually we'll absorb those remaining sales orders and then break past it. Yes, is there a chance that price break past my take profit and go deeper into? Absolutely. But I have to respect how I trade. So this is where my take profit is. If it passes more than my take profit, fine. I no longer want to be in the trade. I've gotten my portion out of the market. I'm contented with that, and I can wait for another setup to actually, form. It's that simple. That's basically how I trade. Um yeah. So okay, I wanted to say something. So this zone now is no longer valid because we've used it. And now that we just broke structure to the upper side on the 15 minutes, this becomes a demand zone right here. But this kind of demand zone is not a demand zone I want to use when price is coming back towards it. But like this is actually a new area of demand because we tapped into this 15 minutes. So let's say this whole area like this now has just become a very strong area of demand. You could refine it and be like, okay, refine it to this point right here, because here, right here, there's like a fair value gap. You can say, okay, this is basically the fact that we broke structure back after we were breaking structure to the downward side. Now we've shifted on the 15 minutes. It shows that bulls are like back in control. Could be temporarily, but they are back in control at least on the 15 minutes time frame because we've shifted back to the upward side. But notice how if I was trading the 15 minutes time frame, this is when I'll just be getting to understand that okay, it's time for me to buy. So it's kind of like late, but due to using the lower time frame, but understanding that I'm using the lower time frame in respect with the higher time frame key levels, I was able to get a much more earlier entry. So I was able to see when the bulls go back in control right here. I mean, right here, early enough compared to seeing it now on the 15 minutes. So it gave me an earlier entry. So that's how you kind of like get better risk to reward ratio. It's not by squeezing your stop losses or trying to extend your TP target beyond where it's supposed to be. And that's pretty much it. So now all I can do is just wait, allow price to do its thing, and if it's a winning trade, if it's a winning trade. If it's a losing trade, it's a losing trade. But this looks much more like a winner, but at the same time, anything can happen. It's a probability game in this market. The only thing you have control over is your risk. And that is pretty much it. I think this live has been on for like this something minutes. And I'll catch you guys in my next live video. So if you have any question after this live, the video will be uploaded. You could like drop a comment and I'll make sure to answer those questions. Have a great day. I need to go have my day. This is 10:13 in the morning. I just had to quickly hop in here quick and drop my breakdown on this trade, my thought process on this trade. So I'm not about to sit here and watch price until it gets to my take profit. I don't have time for that. But that's pretty